Ladies and gentlemen, Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is down about 2% there on the S&P. Bloody red day. Looks like Nasdaq is down 3%. Semiconductor did get hit 4% today. I don't know last time we hit 4% negative day on the semiconductor. Dow Jones up down 2%. Same with the Russell 2000. Transport down 1. Banks down about 2%. Energy is printing green today, 0.3% positive. Biotech also did get hit, 3.2%. Healthcare 1.7. Home builders down 2.5. Utilities, retail, emerging market down about 1.2 or so. Bitcoin also did get hit for 4.2% negative. Gold, silver, miners down about 1% each. Dollar slightly green there. Oil's down 1%. Treasury bond 1.5% negative. We have VIX popped 24% positive, with the equities being down pretty heavily today. Let's stick with S&P 500. Spider 65-minute chart here. So it looks like we saw a gap down today. This is actually a third down gap. We have a down gap from way before earlier this month, and then we can see right middle of this month we saw that 447 down gap, and this is something that we talked about. The bulls needed to fill this gap as quickly as possible. We talked about this right here. This was from last week. If this down gap, talking about this right here at 447, if this down gap isn't filled or gap over early next week, expect shenanigans. Again, that's right here. That's that gap. There was that attempt to fill it right here. There was that move, and it was imperative. This move right here. It was imperative buyers get up and fill it, right? So they tried it here, failed. They tried it here, failed. And then too much weight, I think. It's staying too long. This gap not getting filled. With that, bears opened up their own down gap. And bears did their own jumping down the fence, right? Because you can see my short-term moving average was residing in the vicinity. Acting as support this today, yesterday, and then all throughout, 2 trading sessions late last week. And you can see bears were like, and then we had that midterm moving average residing in that vicinity. And you can see there was a gap here, that up gap, right? Bears were like, you know what, I'm not dealing with that. We're just going to jump over that. So we gap below it and we flush right through this gap. You can see right here, definitely a shenanigan, because you guys know that when the gap gets filled, it almost always, not all the time, it often acts as, support, right? You can see there's that gap here. So that should have been acting as support today. Why not act as support today? Well, when the shenanigans happen, things can go pretty crazy, especially to the downside. Keep in mind, when things move to the downside, people react more in a fearful, panicky way. So market is going to be more erratic to the downside. When the market goes up, market seems to be more in an orderly fashion. And that's totally normal. Most people don't understand this. This is why the market is constantly, creating that suspenseful notion in the market, because it's like going up slowly. When is going to be the day we wake up and market is down 2%? Well, today was that day. Market is down 2%. Now market trading below the short-term moving average and the mid-term moving average. This gap didn't get filled. We opened up another gap. Bears filled up this up gap, and bear filled up both of the gaps today. There's that up gap right here and right here. I don't know the last time, especially this year, we've seen a move where it filled both of the up gaps in one day. It's rare, but it happened today. And you can see we saw a little bit of bouncing activities on the 4th and 5th hour, but just not enough. With this kind of shenanigan down move on the last hour, we even lost a little bit of move there after filling this gap. So what can we make of this market with this kind of a shenanigan day today? Well, now that we're back below these short-term moving hours and the midterm, well, I have to say short-term, obviously. We've been bearish, in the short term. Remember, we talked about in the short-term sentiment will not change until this gap gets filled for the buyers, right? So this is why it was imperative that buyers fill this gap. But I also talked about bears. You make sure bulls don't fill this gap, and they make sure of that with their own down gap. And with that, we got this gap, we got 3 gaps, down gaps remaining open. And also with today's shenanigan move, bears also filled the up gaps that bulls have opened up. Things are looking much more vulnerable for the buyers in the short term. We continue to cultivate lower highs and lower lows. However, this right here, we can't consider this as lower low yet, right? Because remember, that's a low. For the downtrend to continue, it must cultivate lower lows. So we do have a lower highs. So in the short term, obviously, then benefit of the doubt goes to sellers. In the midterm, I would have to say I'm still kind of in the midterm neutral to bearish. The reason is because we haven't begun to cultivate that lower low yet. If we do see a bounce from here, we can still consider this higher low. Remember, that's a low, that's a higher low. So here's what bulls or bears need to do going into tomorrow. Buyers obviously desperately need to fill this down gap. You can see short-term moving as the mid-term moving hours in that vicinity right now. Those levels, that level could act as resistance, but this gap needs to be filled as quickly as possible. But a lot of that selling pressure has been coming about from here. So the longer this gap remains open, these 2 gaps remains open, the more hectic it's going to be. Keep in mind, this gap hasn't been filled, and because of that, it's been hectic the entire month of September. We talked about this earlier month. This month must fill this gap, but then now that bears opened up these 3 gaps, probably things are looking not so bright for the buyers in the near term. So bulls obviously want to go up and fill this gap as quickly as possible, but it's question at best because that level could act as resistance. Not only that, we got short-term, mid-term moving average also could act as resistance at that time. As bears, obviously, we got the long-term moving average currently trading at 430 or residing at 430. 429 is that pivotal low here because we saw that 3 to 4 days of rally before it kind of came back down today. So 429.43 is a level to break for the bears. Come back down to 422.03. Let's check out the oscillator. And before we go to oscillator, let's just kind of look at the more of a mid to longer term periods. Keep in mind, we've seen something similar before right here. So this is, I don't think this is a level where bears should be too confident with that kind of move because we've seen that before where we initially made a move, this thing actually came back down and we actually did that double bottom and market rally for how many months? 4 months, right? Cultivating higher lows. Are we still in the vicinity of higher low? Yes, low, higher low, higher low, higher low. So even this thing comes back down to 429 or 430, right? If the market is going to decide to do something like it did in May, well, bulls can turn this thing around within a couple weeks. Just keep that in mind. So what the bears must do, I mean, they must do this, is to break below 429 and cultivate lower low and lower high and go after 422. If they fail to do that, if there's some kind of a hint of any kind of reversal pattern in this vicinity, because we're an overall uptrend, you'd be surprised how quickly the sentiment can shift. I remember how many people are so bearish on this downturn. So many people exited their entire longs and missed out this move. Let's check out the oscillator and see if we can extract any more information. So it's interesting because we have a slightly similar kind of a move here. We got this potentially this thing going on, and that's, I mean, it's not really huge signal or anything like that, but you can see if we do see a bounce in this vicinity, things gonna look pretty similar to what we saw back in May. Right here, even the oscillators look similar if we do bounce here. So you can see this oscillator right here, this guy did not come all the way back down to the low, right? You can see how it didn't come down and retest this low. Instead, we stopped short. You see that? That's a higher low. If this thing bounces from here without coming all the way back down, obviously bears want to bring it all the way down as much as he can. But let's say we bounce straight up from here and makes that slight higher low, things could get, you know what I mean, things could reverse pretty quickly. Why is that things can reverse pretty quickly? Well, because we're in longer term and the mid to long term uptrend. That's why when you're in a longer term, mid to long term uptrend, things can shift quickly, despite the fact that how it looked bloody red today. You'd be surprised. Again, that's what it looked like. Here, I'll show you back in on the video with this. I'll show you what it looked like back in May. Just think about if this was today, how would you feel? If this is what it looked like today, what are you thinking right now, right? Look at this, it's huge gap. It looked like this was a low. It looked like, you know, buyers ready to kind of get up here. Failed to fill the entirety of that gap. We talked about this back in May. Failed to fill the entirety of that gap. Shenanigan, gap down, another gap. I mean, what are you thinking at this level? Well, this thing is ready for 380. Remember people saying that? This was at trading at 407.67 in May, and then what happened several months later? Well, went to 450. Look at where we end. So market can able to kind of create this kind of anxiety effect, right? Have these investors to kind of continue question themselves or the integrity of this uptrend or this bull market that you are in, and give you these kind of shenanigans to bully people around. So let's continue, continue to focus on the longer term of things. Let's not get too intimate with the short term fluctuations. Let's see how the market plays out tomorrow. I will come back for you. We'll reassess the situation. We'll go from there. Enjoy your evening and go trading tomorrow.